The drastic fall in Nifty following the outbreak of COVID-19 and the subsequent dazzling rise of 37% from March lows has facilitated addition of new retail investors and traders. Well, the most obvious beneficiary of this trend is the broking business. Around 1 million new demat accounts were opened in the months of March and April. So in our Ideas for Profit today, I'll discuss about ICICI Securities, India's second largest broker with around 10% active client market share. Now, there is more than one reason that really makes us optimistic on this stock. Firstly, ICICI Securities has been attempting to diversify its revenue stream in order to reduce the dependence on the broking revenues, which are inherently volatile in nature. It is encouraging to see that ICICI Securities increased presence in the distribution business as the second largest distributor of mutual funds among the non-banks. Second of all, though the competition from the low-cost brokers has been rising, but the recent spate of events in the broking industry, say the likes of Karvi scam, is likely to accelerate the market share gains of large institution-backed brokers like ICICI Securities. Thirdly, ICICI Securities is also riding high on the digital initiatives and also reducing costs quite efficiently. Most importantly, ICICI Securities business is well placed in the pandemic time with the low balance sheet or the balance sheet risk that it has. It has virtually no inventory or supply chain risk. Being capital light business, ICICI Securities delivered high return on equity of 48% in FY20 and paid out the dividends as well. In Q4, it also saw a growth in brokerage income after 6 quarters of decline. Now, brokerage revenue increased by 26% year on year due to the ramp up in the market share. Equity market share also improved to 9.1% in Q4, that was up 170 basis points. Now, equity allied businesses, which comprises of lending towards the ESOPs and the margin trade funds, also saw a revenue growth of say 78% year on year. And as a prudent measure, ICICI Securities proactively halved the margin trade funding and ESOP book in Q4 over the previous quarter. Now, with over 3.2 lakh prime subscribers, revenue stood at 8 crores in Q4. That was up 44% compared to the previous quarter. And it added 80,000 subscribers in Q4 alone. Now, it also allowed open architecture where non-ICICI bank account holders were also allowed to trade on ICICI Direct, which also actually allowed ICICI Securities to target the non-ICICI bank customers to achieve its growth objectives. Now, the growth in the distribution revenue was definitely sluggish at 3% year on year in Q4, which was impacted by the regulatory changes in mutual funds and also due to COVID-19. Now, with focus on the digital initiatives, ICICI Securities has improved its cost efficiency in the past year, which has really helped it maintain the profitability despite the revenue pressure. Now, while the current trends are extremely encouraging, investors should definitely note that ICICI's business is dependent on the capital markets and hence inherently is cyclical. Now, the current high trading volume and the client additions may not sustain if equity markets remain range bound. Now, we do see a favorable macro factors supporting capital market business and also believe that ICICI Securities is well positioned to benefit from such long-term trends as well. Now, if you look at the stock, it is trading at close to 52-week high price. At the current market price of say 473, ICICI is trading at 24 times the FY22 estimated earnings. Now, given the cyclicality of the business, valuation appears quite full. In the near term, the stock price will move in tandem with equities. Also, long-term investors really wanting to play the capital market story can definitely buy ICICI Securities on dips.